Ready.
Hi, good afternoon, everybody. This is your favorite realtor, Alex Wolking with Keller Williams, and I thought I would bring you a very special guest this week, Patty.dalkos with Guaranteed Rate. She is my absolute go-to lender for everything. Patty and I have closed a number of deals together, and of course, I've gotten tons of questions about lending and financing and the mortgage market. So instead of me trying to answer those questions for you, I wanted to bring you the absolute best in the business, the expert, Patty.dalkos. So Patty, thank you so much for joining us today. I appreciate your time. Thank you.
Thanks for having me, Alex. I appreciate it.
Thank you. Well, I just have 5 quick questions here.
Okay.
I wanted to pick your brain on what's going on in the mortgage industry. So Patty, first and foremost, what's happening? What's going on?
Well, that's pretty much the general consensus every day. What's happening? So, Alex, as you know, we're in unprecedented times. Obviously, what's happening, no one ever expected anything like this, and it's affecting everyone. So, a couple of things. Most lenders, especially Guaranteed Rate, everyone is working remotely. We are fully operational. Everyone is taking loan applications. We're closing mortgages, including all refis and all purchases. So it's business as usual in different capacity. So please make sure that all of your clients know this. We are always available to answer questions on mortgages, purchases, pre-approvals, refis, anything that's needed. So in that regard, nothing has changed. People are watching the news, people are seeing their stock portfolios fluctuate dramatically. So I'm not going to lie, things have been a little daunting in the mortgage world, keeping up with the constant changes. I'm going to throw out a couple of terms. I'm sure everyone's familiar with Fannie Mae and Freddie Mac, and of course the jumbo world. So regarding mortgages, we are still closing loans, and I can answer more questions about Fannie Mae and Freddie Mac and how they've kind of eased into their programs certain aspects of it regarding appraisals to keep people safe, regarding programs themselves. Those were very streamlined to begin with, so we haven't seen too many changes on that end, with one caveat. There are many people temporarily laid off, temporarily unemployed. I must stress to you that no lender will be able to fund any loans if people are not actively employed, which means verification of employment prior to closing, and there's no way around that. So if you feel that there's a pending job situation change, and it's going to affect your closing, please reach out to your lender, your agent. Specifically, it's going to affect the potential close.
Got it. Okay. So what's happening with, so you kind of mentioned a little bit ago, with the stock market changing, drastically every day. So how is that impacting mortgage interest rates? One of the questions I got, Patty, was some people were saying, well, the Fed cut the rate to 0. That means mortgage rates are going to come way down too. Can you shed a little light on the truth behind that?
Sure. So the Feds cut the federal funds rate to 0, which is the fund rate between banks to banks. That did not affect the interest rates that we work off of. So I got a million calls that Sunday afternoon and said, so my mortgage interest rate will go down to 0? No, that's not how mortgage interest rate works. Unfortunately, the liquidity in the bond markets was not happy with what the Feds did, and the mortgage interest rates reacted adversely. So since then, the Feds have pumped in billions of dollars to shore up the treasuries, to help give ease to the markets about the pending recessionary concerns, global concerns, and to help establish that people aren't going to bail on their mortgages, basically, is what it comes down to. One thing that has not rebounded has been the jumbo world. The jumbo lending markets have tightened up dramatically. Jumbo interest rates have gone up pretty much, and jumbo guidelines are tightening up. We're seeing some jumbo lenders actually not even lending anymore. Small jumbo lenders. Obviously, the bigger lenders are still lending,
Sure.
but you are going to see the tightening of jumbo guidelines. There's no way around that.
So, Patty, just for the folks at home who don't know what a jumbo loan is, what is a jumbo loan, or what qualifies as a jumbo loan?
Anything over $510,400 in our area, Cook County and the surrounding counties, qualifies as a jumbo loan.
Okay.
Anything at $510,400 or below is considered a Fannie Mae, Freddie Mac, conventional type of conforming type of loan.
So that
FA
10,400 is the loan amount, not the purchase price, correct?
Correct. The loan amount. Yes, correct. So those are the parameters that we all work within. And again, the jumbo world is tightening up dramatically. So if you are going into that realm where you do need jumbo financing, please pay attention to your stocks. You will be required to have reserves for total housing payment. You need to make sure that you have those in place, and you have to monitor your stock portfolios. We're requesting updated documentation up to the minute of closing. So it's really, really important. If you don't have that, then you're not going to be able to close.
Gotcha. So that kind of leads into my next question. So how should buyers who are navigating these waters, how should they best prepare, either if they're under contract, or even buyers who are out looking, or maybe even sellers who are looking to refinance? What should people start preparing for?
So people should always have their ducks in a row. We did get some good news. The IRS did push back the April 15th filing date, but it is tax season. So generally around this time anyway, you're compiling your W-2s, your pay stubs, you're getting organized for that tax preparation date. Fannie Mae and Freddie Mac have completely streamlined the process regarding a loan process. If you are a W-2 employee and we can verify through third-party verification system, sometimes we don't even need W-2s and pay stubs. So it really depends on your employment situation. If you're self-employed, we're definitely going to need 2 years of filed tax returns and your K-1. So have that information ready. Have 2 months of bank statements ready, all pages. We're always going to require all pages of documentation that you provide. Most of this stuff is available via PDF. You can log in onto your bank website and get this stuff sent over to us. Everything is uploaded into our safe portal. Nothing is done via email, so everything is safe and protected. But these are required documents. Every single lender is going to require pretty much the same documentation. So just get ready. And, I'm more than willing and able. I talk to clients all the time, as you know, Saturdays, Sundays, evenings, late at night, whatever is necessary. We're here to help. We're here to coach the clients. We can help them get ready, especially if a seller is also looking to sell their home and to purchase a home. What are they going to need? Because, they have their sale documents as well, especially if it's a closing on the same day, a closing and a purchase on the same day. So we just try and keep everybody organized, everybody streamlined. It's a very methodical process, and it should be easy.
So basically, Patty, what you're saying is the best way to prepare is to have the most updated information and documentation ready to go. And
yes,
that'll help you stay nimble, help you stay on top, but also really making sure that people who are shopping or refinancing have, that way, the more information you have, the more informed of a decision they can make.
Absolutely, 100%. And this is a phone call conversation. We don't really need to see every document. I can talk to a client and we can gather this information over the phone. Most loan officers, if they've been doing this a long time and they know what they're doing, they should be able to ascertain the information properly over the phone, at least to give them an estimate, a range of information. If the client wants to fill in an online loan application, they're more than willing to do so. We encourage clients to do that so we have accurate credit scores. We always like to deal with the information at hand that's current. And this way we can quote current interest rates. We can let them know, hey, you've been approved through Fannie Mae or Freddie Mac. We have your underwriting approval already automated. So it really helps you as the agent to go in and put in an offer. You can let any seller know, hey, this is a level 2 pre-underwrite approval. We're good here. We're good.
Gotcha. Awesome. So then tell me a little bit about, are there any buyers or are there any particular kinds of clients who stand to benefit from the current situation? Or are there any opportunities at all?
I think there's always opportunities, Alex. I think in any market, I think some buyers might be sitting on the sidelines waiting for lower interest rates. I tell my clients, if you find a home that suits your needs and you're comfortable with the monthly payment, no one has a crystal ball. No one knows exactly what's going to happen next month or 2 months from now. If it works and the budget matters to you and everything checks the boxes, in other words. You find the home, it's got enough bedrooms, it's got the outdoor space you're looking for, and the price is right, make that move. We just don't know what's going to happen tomorrow. Yeah. And you have to seize the opportunity as they come along. Many people sat on the sidelines and thought interest rates were going to drop and drop and drop and drop. And what happened was the exact opposite. So they lost out on that opportunity to refinance because they thought that interest rates were going to drop another 0.5 point. So now, they're all waiting again, and, every dollar counts. Yeah. So we're here to help. Again, we don't have a crystal ball. All we can do is relay the information, but we all have an idea as to what's happening. So if you see the opportunity and it works for your family, don't wait.
Cool. Awesome. So to go back to a little bit earlier, I thought of a question. So regarding the jumbo mortgages, so in terms of clients who may be buying like $1 million property or something like that, they're going to be over that jumbo limit. I guess, is there anything that they need to be cognizant of or watch for, or is there anything that they or is that market just coming to a screeching halt?
It's not coming to a screeching halt, but it's coming to a slower pace,
okay,
if I may say so, in a nice way. Please have your documents buttoned up. Every K-1 is going to be scrutinized. If you're self-employed, you have got to have your P&Ls ready for 2019 if you're filing an extension, or if you haven't filed your tax returns. Your balance sheets better be prepared. If your income is declining, if it's a dramatic decline in income, every underwriter is going to question that. Jumbo loans, before all this happened, were pretty clean in conditions. In other words, after they come out of underwriting, an underwriter might request 2 or 3 updated documents. Now we're seeing double the amount of questions that they're asking. So it is not for the faint of heart. I'm just letting everyone know that if they are in that world, again, if you're W-2'd, it's not as much of a situation. Just please make sure you have enough reserves in your stock portfolios, and your loan officer should be able to let you know where your funds can be utilized for reserves. It's important that you have enough allocated funds for down payment, closing costs, and for reserves. But if you're self-employed, please make sure everything is buttoned up. It's important.
So how many months of reserves do buyers need in the jumbo situation?
If it's less than $1 million, it's generally 12 months. Some lenders require 6, but we're going to see that changing as well. Okay. Over $1 million, again, depending on the jumbo lender, some require 12, some require 18 months. So, keep paying your bills on time. Make sure your credit scores are high. That helps as well.
Yeah. So when you say $1 million, again, that's referring to the loan amount, correct?
Correct.
Okay, got it. Wonderful. All right. So moving on then. So the next question I have is, so talk to me a little bit about how the closing process has changed. What's different with closings now?
Oh, we have instituted, well, we did this a long time ago. We started a program called Flash Close, where closing the day of, the client can actually DocuSign all what we refer to as wet signature documents. In other words, like the mortgage, the note, these are documents that need to be signed in front of an attorney. But there's a lot of documents that don't necessarily need to be signed in front of an attorney or a title agent or an escrow agent, and those can be DocuSigned. So the package goes out to the client the morning of the closing. The client will DocuSign all non-essential documents, and once they get to the closing, literally their time is very, very short. It can be in a closing room for less than 15, 20 minutes. They'll sign the required documents in front of their attorney or in front of the title agent, escrow agent, and then they can choose to go sit in their cars while we fund the loan. So very, very, very short closing process. We really want to make sure that everybody stays safe during this time. And we also understand people's concerns about venturing out of their homes. Power of attorneys are generally frowned upon anyway. They do want the borrowers, unless it's, something severe, they generally want the borrower to sign the package. So between flash close and limited exposure, this is something that we have found to be extremely useful. And again, for refis, we're doing the same thing. Flash close, and notary will literally go to the door of the client's home, give them the package, they sign it inside, and the notary will just take a picture of their license. So it's really, really, really come streamlined, and we offer that. We want to make sure, again, everybody stays safe during this time. Yeah. But we also still need to close loans and make sure our clients get what they need.
Sure. So closings have not stopped. I mean, they're still, it's still considered an essential service. So
it is.
So is this a trend, this streamlined closing? Do you think this will last beyond the
I think so.
Yeah.
I think so. Again, Guaranteed Rate has been doing flash closes for well over a year. So well before this pandemic or virus, affected things in business. So I personally have done many, many flash closes with my clients. So some clients would opt out of doing it because they were ingrained doing the old world closings. You sit at the title company, sit at the table with your attorney and review every single document. But when you come down to it, most of the documents can be DocuSigned. You still have the option of having the attorney review all the documents with you if you choose to. No one's saying we're not going to talk to you about the documents. You're just really re-signing most of the documents you signed originally.
So you're really, you're offering them an option.
Yes.
To limit, exposure. And
of course.
Maintaining your 6 feet of distance.
Of course.
Gotcha.
Alex, can I bring up one more thing that you talked about? We didn't touch base on. Fannie Mae and Freddie Mac are also allowing a couple of different appraisal options at this point if the property qualifies. So depending on the down payment of the borrower and the loan parameters, they will allow for certain exceptions for either a desktop appraisal or a drive-by appraisal without an interior inspection. Those get a little tricky if a site inspection needs to be completed. So that's why I'm saying cautiously. In some instances, desktop appraisal will be utilized if they qualify. So if they do need to get in there, though, we do need to make arrangements with the seller of the property, and appraisers are taking 150% precautions on getting in and out as quickly as possible to limit their exposure. Of course, we want to keep everybody safe, and I'm sure home inspectors are doing the same thing. If the property is tenant occupied, the tenant needs to allow access to the unit as well. So it is a little more complicated, but hopefully that the desktop appraisal or the drive-by appraisal is allowed in these particular circumstances. So we do try and push it, but Fannie Mae and Freddie Mac once we run the system, they let us know what is allowed and what is not allowed.
Gotcha. Okay. So, just to kind of run through some examples, what are, you mentioned, the down payment options, depending on how much they're putting down, certain clients may qualify for these modified appraisals. So what does that look like? Could you have somebody that's putting 20% down or 10%?
If somebody's putting 5% down, most likely it'll be a full interior inspection. I believe the standard is at 15% down.
Okay.
If the overall borrower qualification approves it through automated desktop findings. I know I'm speaking mortgage lingo now, so I don't want to pigeonhole myself into one thing. So we run the program, and the program lets us know yes or no if it qualifies.
Got it. Okay. So it has to be a combination then, it sounds like, of the borrower as well as the property have to qualify.
Correct, correct.
Match, then it could qualify. So really it sounds like the properties that are most likely to qualify would be your typical 2-bed, 2-bath condos, like in like hot areas. It really depends, obviously, but those are the ones that are a little more, I don't want to say cookie cutter, but the ones that are a little more common would have a higher chance of qualifying.
Again, it really comes down, yes and no. It's going to come down to down payment as well.
Oh, right.
Yes. So again, if someone's putting down 5% down, they're not going to qualify for this type of basic drive-by or desktop.
Cool. Sounds good. Well, Patty, that's all I have. Do you have anything else that you'd like to share that we should be aware of?
We're all here to help. We are a constant source of information. While the internet is always there and it's a click of a button, always reach out to a mortgage professional. You're going to hear that your neighbor got a 2% interest rate and you're going to call and say, well, why can't I get that? Every situation is different. Every property is different. Everyone has a different down payment. Everyone has different credit scores. So always reach out to your mortgage professional and your real estate professional. Why did somebody get a deal on one property? Well, you don't know what the seller's position was. You don't know what was going on in that particular area. We work with what we know, and we rely on our experience to help all our clients, and we're all here to help. And it is business as usual. We want all our friends and family and clients to stay safe during this time. Again, this is unprecedented, and we're all here to help, and we're all in this together. So thank you so much for your time, Alex. And we're going to get through this. And I truly feel that mortgage rates are probably going to stay on the lower spectrum. So let's get people out there. Let's get the housing market back going again, and let's get people closed.
Sounds great. Patty, thank you so much for your time. And for everyone watching this, be sure to check out the description in the video in the comments below for Patty's contact information. If you have any questions at all, please feel free to contact Patty or myself. We'd love to help you. Thank you so much for joining us today.
Thank you. Bye.